Hi, everybody. This is Marilyn. Do we have any audio? Thank you. Great. This is Welcome to My World, the noon edition on the 4th of November. This is a Wednesday, crude oil inventory day. So I'll take a minute here to go over what the morning brought us. The morning had quite a few nice trades. Um, if I don't know how many people in here we've got, we must have a lot of new people because we have quite a few in here. So if this is your first experience at watching crude oil inventory morning, it normally comes out every Wednesday at 10:30. Today it was just a hair away from the expectation. The expectation was 2.5 and it came in at 2.8, which is still pretty darn low, but there doesn't seem to be a lot of demand. So the price is going down. If you were trading this morning, the Canadian dollar gave us a big hint on direction here. The Canadian dollar was a very, very unhappy instrument this morning. They were unhappy. Of course, the U.S. dollar's been screaming higher all day. But crude oil and the Canadian dollar tend to trade fairly closely. There's pretty good correlation between those. So when this was announced, what we had over here was this was right about in here. We'd had a whole bunch of chop, and this kind of chop is typical of a lot of indecision, and the market is sitting there waiting on something, which today was the announcement of those numbers. So let me get these charts brought up here so we can take a look. The new ISIS is what I call it. I don't know, the sharpshooter, that's what this is. I get the names of all this stuff a little mixed up here. But this really gave you a very nice signal off of the ICE midline right here. And while this did go up a little bit, there was definitely, right at the announcement, it fiddled around here and acted like it was going to move to the upside. We had a lot of red apexes in here, and the Canadian dollar was going down, down, down. So the best thing to do is just sit. I mean, this happened within the first 3 minutes of those numbers coming out. So this is not really a place you'd want to trade. But if you give it some time until it acts like it's going to take a direction, it never changed over to north, and it's been going in a downward mode ever since. I keep a small 30-minute candle chart up on Brent. Brent tends to lead West Texas, which is what we trade. And Brent had gone down this morning and hit a significant level, about 49.5. And when it pushed through there, this really started a downhill roll. So taking an entry on this, if you took an entry up in here, it takes a little more experienced trader because this is moving very fast. But once it gets to the midline of the ice and the direction seems to be to the short side, you certainly could have taken this from one deviation level to the next deviation level. That was a a fairly safe, easy trade. A little bit easier to see on the 210. I won't take up a bunch of, well, let's see. Let's go back here and I'll show you, because there was right here when it came off of here, you had this one of these lorry slings right here. And if your assumption was that it was going down and you were looking for an entry, deviations are always, these deviation levels are always major streets. The bus drivers know those streets very, very well. So that would have been an easy trade to take. But you definitely want to get out right here. Don't get greedy and think, oh, it's going to go forever, because especially on inventory day, you don't really know what it's going to do. But once it put in a second E right here, I don't generally like these with the X at the bottom, but today with Brent falling and the Canadian dollar falling, the assumption would be that it's going down. So from here on down to either this magnet, or you could have gotten out at the big magnet right here, which is the red ice, or you could have gone down to the next magnet. But this big magnet, it could have gone down to the bottom of the range channel, because crude oil does like the tops and the bottoms of those. But today, if you were trailing your stops right down, I would be real happy with getting out at this 46.35 magnet. When you've got a run like that and a trend on crude oil, and you've got 35 or 40 ticks, I would be protecting those ticks like nobody's business. There's no sense in giving back. I mean, that's a nice contribution to the bank. So yes, it can, and I've seen it. It can go on for 90 ticks, but it will vacillate around at a major street. So getting out there and then waiting for another opportunity is also not a bad idea. So having said that, I'm still debating on TF. TF it gives some really easy trades, and I'm deciding between the 519 tick shadow and the old 12 tick diagnostic, because I certainly like the old 12 tick diagnostic better for trading crude oil. But I will try and get a post on that that TF. I call it the no-brainer trade, because it, believe you me, to me, it's very, very simple. You do have to know a few things, but you don't have to be able to read the market like you do to trade crude oil and bonds and some of these other ones. So I'll try and get to that this weekend and mark up some charts for you. This afternoon, what to expect this afternoon? I would not be expecting too much in the way of tradable movements on crude oil, because typically when it's had a nice run like this, in the morning it tends to chop around in the afternoon. And I think the noise level from the gardener is getting a bit much. But I'll just let this go because of the noise. And this has been my view from my world in Apex land, brought to you by Apex Investing. And I'll be back about 2:30 and we'll see what the afternoon has given. Thanks.